Good afternoon or good morning, everyone. Welcome to today's session on what you need to know if you process payroll. My name is Anna McNally. I have over 15 years of payroll experience. I am certified with the National Payroll Institute, and I'm also a member. I am going to just turn my camera off during our presentation, and then at the end for Q&A, I will turn my camera back on. So thank you. All right, so today's session, we will cover three topics. Mainly the Canada Pension Plan. We will talk a little bit about some EI release notes that came out recently. We will also talk about the Canadian Dental Plan and some other payroll updates. This presentation provides information about selected payroll topics and is not intended to be legal advice and is not intended to replace employment and/or taxation laws. Payroll practitioners should verify the accuracy of the information as government legislation shall prevail if there is any discrepancy between this material and government statutes or regulation. So the Canada Pension Plan or Retirement Pension Plan was designed to replace 25% of the average work earnings and is a monthly taxable benefit that replaces part of your income when you retire. If you qualify, you'll receive CPP pension for the rest of your life. To qualify, you must be at least 60 years of age and made at least one valid contribution to CPP. Valid contributions can either be through work you did in Canada or as a result of receiving credit from a former spouse or former common law partner at the end of their relationship. If you want to find out how much CPP retirement pension you'll receive, you can use the Canadian Retirement Income Calculator. At the end of the presentation, I do include a link for you of how you can access that, or you can search on it on the internet. The calculator will provide you with retirement income information. This includes old age security, which is also known as OAS, and Canada Pension Plan, which is also known as CPP. To estimate your retirement income for various sources, you will need to work through a series of modules. Then you'll need to compare them to your goal income. This allows you to see the impact of the changes you will make and how you can potentially save for your retirement. CPP now consists of the original CPP plus two additional components. This is the Canada Pension Plan Enhancement. The plan enhancement will increase the replacement income from 25% to 33% of the average work earnings. The two components were phased in starting in 2019 and phase two starting in 2024. There are two items here that I'm going to read the information on, and that is what YMPE stands for. So YMPE means the year's maximum pensionable earnings as defined under the Canada Pension Plan. And then the YAMPE, which could be new to some of you, means the year's additional maximum pensionable earnings. So what does this mean for you as an employee, you as potentially an employer, or for your employer? Starting January 2024, there will be two maximum pensionable earnings and rates referred to as the YMPE and the YAMPE. Depending on employment income, some employees and employers will pay two different CPP rates. In the sample provided, the first maximum is up to $68,500 with the rate of 5.95% of earnings, and the second maximum up to $73,200 with a rate of 4%. So if an employee earns $68,500 or less, the rate that will contribute, both employee and employer, will be 5.9%. However, if the employee earns $75,000, they will also contribute the 5.9% up to the YMPE, and then an additional 4% on earnings between YMPE and YAMPE. The sample that you see on the screen is just a sample of projections, but since the time that this was published, we do have some additional information on that. So what does this mean? That means in 2023, there's going to be no change. So your T4 is going to remain the same. You're not going to be reporting any extra CPP. But in 2024, there will be new T4 boxes. And in fact, the new T4 that has been released, which is T4 23, includes the new T4 boxes. So for T4 slips filed for calendar year 2024 and after, report the amount of CPP2 contributions you will deduct from your employee in box 16A. And for Quebec, report the amount of QPP2 contributions you deduct from your employees in box 17A. So depending on the system that you use for payroll, you would probably receive these enhancements in your payroll tax tables that will be released for January, so that you can file your 2023 T4s as normal, as well as going forward any T4s for 2024. Released in November, on November 1st of 2023, the CRA announced maximum pensionable earnings and contributions for 2024. What you see on your screen are the changes that were released on November 1st. So what they've released is that the maximum pensionable earning under the Canadian Pension Plan will be actually $68,500, up from $66,600 in 2023. The basic exemption amount will remain the same, which is $3,500. Starting in 2024, a higher second pensionable earnings ceiling of $73,200 will be implemented and used to determine the second CPP contribution, which we'll refer to as CPP2. As a result, pensionable earnings between $68,500 and $73,200 are subject to CPP2 contributions. So below that, you actually have what the amounts will reflect if you do max out on the CPP. So for employee and employer contribution rates for 2024 will remain at 5.95%, and the maximum contribution will be $3,867.50, up from $3,754 in 2023. The self-employed CPP contribution will also remain the same at 11.9, and the maximum contribution will be $7,735, up from $705.0890 in 2023. Employee and employer CPP2 contribution rates for 2024 will be 4%, and the maximum contribution will be $188 each. For self-employed, CPP2 contribution rates will be 8%, and the maximum self-employed contribution would be $376. Contributions are not required or permitted to be made contributions during the pensionable earnings of 73. So what that means is beyond the ceiling rate of 73,200, there will be no more CPP deduction. Also released recently was the Canadian Employment Insurance Commission announced the following rates for 2024. So maximum insurable earnings will increase from $61,500 to $63,200. The EI premium will increase from 1.63% to 1.66% outside of Quebec. And if you are in Quebec, the EI premium rate will increase from 1.27% to 1.32%. There are also the reduced rates on the screen that you can take note of, and this has all been published either through the Canadian Payroll Association, also known as the National Payroll Institute, or on the CRA website. So now let's move into our second topic. Our second topic is the Canadian Dental Care Plan. So the Canadian Dental Care Plan is a federal government initiated plan to improve access to dental care services for Canadians. The legislation requires employers to report on a tax slip whether an employee, a former employee, or spouse of a deceased employee is eligible or was eligible on December 31st of the reporting tax year to access dental insurance or dental coverage of any kind due to current or former employment. So before I continue on with this, let's do the second poll. And the second poll is, does your company provide dental benefits? Before I continue on with some more information about the dental plan, I want to circle back briefly to the CBP enhancements and changes that will affect your employee and employers. One of the questions that I've had that I probably should have addressed earlier, especially for the large amount of you who are not aware of the plan, is you can go on the internet and type in the CBP enhancement plan, and it will take you to various areas on the CRA website with additional information. But one of the things that I highly recommend that you do with you and your employer is to draft a letter or an email that you can add, or you can email to your employee, or a letter that you can send to them or include in their next pay stub or in the next meeting you have, is to sit down with your employees or let them know of the CBP changes that are coming, that will be in effect in 2024. And primarily because this will affect budgets for employers who have a set budget for CPP expenditures that they have, as well as employees who might count on having what they call a CPP holiday, perhaps at the end of the year, that might change for them this year. So I highly recommend that you let your employees know of what's happening over the next few years and going forward with the CPP. All right, so back to the Canadian Dental Plan. So based on this plan, the intent was to give access to people in Canada, residents in Canada, based on certain criteria, to have access to dental care. So this has been in effect, or starting in effect, in 2023. And based on this, there are some changes that are also happening to the T4. So there are new T4 boxes and T4A boxes that are added for 2023 that you must report on. So for calendar year 2023 and thereafter, it is mandatory to indicate whether the employee or any of their family members are eligible on December of the reporting year to access any dental insurance or coverage of dental services of any kind that you offer. So you're going to have T4 box 45, and for T4As, you're going to have box 1015. These boxes are mandatory. Now, they did release some news not too long ago that for this year, there are some changes to that, and I'll review that. So the Canadian Dental Plan will provide dental coverage for uninsured Canadians with annual income of less than $90,000. Employer reporting takes effect the 2023. So you'll see on the sample on the screen where the T4 box 45 is going to be, and it is mandatory. There's going to be a drop down for choices if you go online to fill out your T4s, and within your accounting package for payroll, you'll have an option to identify which one of the different boxes or codes that you need to put in here. This is what it's going to look like for the T4A slip. Again, this takes effect for 2023 reporting year and thereafter. And it is mandatory if an amount is reported in box 016. Otherwise, it's optional. So here are the codes that you're going to be selecting. So there are 5 codes to choose from. Both of them, these codes are both going to be accessed for box 45 on the T4 or box 015 on the T4A. So code 1 will stand for that the employee has no access to any dental care insurance or coverage of dental kind of any kind. And I know everybody on this call, the poll was that 100% of you do offer it. So that means that you will have to populate that information. So the second one is has access to dental care or coverage of dental services of any kind for only the payee. The third code is access to any dental care insurance or coverage of dental services of any kind for payee, spouse, and dependents. So this could be your family coverage. Number 4 is access to dental care insurance or coverage of dental services of any kind for only payee and their spouse. And then number 5 would be access to dental care or insurance or coverage of dental for only the payee and dependents. So those will be the 5 codes that you would select from that will report on T4 box 45 or T4A box 105. So this is a latest release, the use of code 1 on T4 slip for calendar year of 2023. So this only applies for this 1 year. In order to reduce the burden of employers, Health Canada initiated an administrative policy for calendar year 2023 only, that it is not mandatory to fill out box 45 when and only when code 1 is applicable. So for everyone on this call, that means that you do have to select the code 1 between code 1, or I guess in your case between code 2 and 5. But if there is anybody on the call who does not offer it, they can leave that code blank this year, or reporting year of 2023, but future years you will have to indicate whether it's a 1 through 5 code. So here's the new T4. This is accessible now, and there is a link at the end of the presentation that you can copy that will take you to the new T4. It's called T4 23. And as you can see, it has the new box for box 45 and the box for 16A and 17A for the changes that affect not only all Canadian residents and residents of Quebec. Now, we should have done a poll to find out how many of you are in Quebec, but I didn't, so I apologize for that. So if there are any of you that are in Quebec and you have questions, please put it on the chat box. So here's some other updates, and I'll go through these pretty quickly. So determining the province of employment. So there is a new administration policy in place that determines the province of employment. So I urge you to look online to get additional information on it. The new administrative policy will enable employers to determine the province of employment based on the primary and secondary indicators to consider for the employee to be reasonably considered attached to an establishment. So in the past, it was always based on where the employee reported to work. And if the employee did not report to work because they were a remote worker, it was always based off of the province of where the employer was and where they were being paid from. So that has changed, mainly because more and more people are working remotely, and this way it allows the employer to go through the primary and secondary indicators to identify the province of employment for taxation purposes for an employee. So the primary indicators are pretty extensive. Generally, all the indicators need to be reviewed together in order to determine whether the employees reasonably considered to be attached to an establishment of an employer. So here are some employment and labor standards. Some of these have already taken place because we are already in November, but I wanted them to bring this to your attention. So there's been some minimum wage increases. British Columbia Pay Transparency Act came into effect on November. And I just put a couple here that were already passed, but you might not be aware of for Newfoundland. Manitoba has a maximum annual assessment earnings as of October 31st change. The Yukon has paid sick leave rebate program available. That's a short program. And they've also joined the National Indigenous Day for June 21st. We also have Ontario, some changes to Ontario that take effect for the Workers' Compensation Act. For Quebec, the pension plan contribution changes as of January 1st, 2024, and we talked a little bit about those. And in PEI, we have actually multiple changes in PEI when it comes to wages. So here are the minimum wage changes. Please take note of any that apply within your jurisdiction. Most of them have taken effect October 1st, but there are a few here that will take effect in 2024. National Truth for Reconciliation. These are the jurisdictions that recognize the National Day for Truth and Reconciliation. So we have the federal jurisdiction, we have British Columbia, the Northwest Territories, Yukon, Prince Edward Island, and Nunavut. Registered pension plan limits have been announced. This was actually posted today. The limits are total contribution for an RPP plan have gone up in 2024 from 31,560 to 32,490. Defined benefit contributions have been increased as well. Profit sharing and as well registered savings plans have increased from 30,780 to 31,560. So now we're going to talk about some useful links. So some of these links, I know this is kind of going fast, but if you can take a screenshot, great. If not, you can let me know and I'll send you them. So the first one is just to give you some information about the Canada Pension Plan enhancements. If you're interested in that online retirement calculator, information on the dental plan, as well as the new T423. We also on our website, I don't know if you know, but if you go to our BAS website and select payroll, we do have actually provincial links, and those provincial links will send you to labor and employment standards for different provinces and jurisdictions. And then of course, you can always get additional information about payroll through the National Payroll Institute. Okay, so I am going to pause and ask Amanda if we have any questions that I can answer.
Hi, yeah. So we do have some questions that came in earlier, and I think they were more geared towards your slides. So I'm just gonna ask, there's a first question here. It says, what if it is not to all employees? Not sure what was being asked there, but I think it was regarding one of your first slides.
Regarding CPP, I'm not sure how to answer that. If you can, whoever put that question in the chat box, if you can just maybe clarify, I'll be happy to answer.
Yep. Next question we have here, can we get a copy of the handout?
Yes, absolutely. But keep in mind, as I was preparing these slides last week and this week, there was changes to legislation, employment standards. So we will give you this information, but please, please, please verify the information before you take it at face value.
Perfect. Next question is, does the new CPP changes affect both employees and employers?
Yes. Yes, it in fact affects both employees and employers. The contribution, once they've reached the YMPE, which is the first maximal or max pensionable earnings, then there is the second, which is CPP2. And then once that is done, then there is no more deductions, but it does affect both.
Perfect. And we'll just get one more question in here. Where can I find employment/labor standards for my province?
Oh, well, A quick and easy way is to go to the BAS website and select payroll, and then there is a link there on here I'll show you, on important links. So here it is. So if you click on it, and we'll give you at the end, there'll be one of the links, and it's by jurisdiction. I do not have federal up here. This is primarily for provincial. So that if you want to get some additional information on labor standards for your jurisdiction, you can click on any one of these links. All good questions. Thank you, Amanda.
Perfect. Yep, that concludes our question period.
All right. Well, thank you all for attending our BAS Connect session today. I wish you a very, very nice day. Thank you.